Hey traders, Mike Sir here. Welcome back to part 4 of the 4-part video series where I teach you how to trade futures contracts. In part 1, I taught you how to trade the US stock market utilizing S&P 500 futures contracts. In part 2, I taught you how to trade the precious metals market, specifically the gold market, utilizing futures contracts. In part 3, I taught you how to trade the commodity market, specifically crude oil, utilizing futures contracts. Now, if you haven't watched part 1, 2, or 3 yet, please watch those videos first, as it will give you a good overall understanding of how the futures markets work. So in the last part of the futures trading video series, I'm going to be utilizing the Iron Bean app to show you how I look for trading opportunities in the S&P 500, gold, and crude oil markets with the strategies that I taught you. So let's get started. As I mentioned in part 1, the S&P 500 index represents the health and sentiment of the US economy. Now, since the beginning of 2022, the sentiment of the US stock market has shifted from bullish, meaning that the markets are very positive, to bearish, meaning that investors are negative about the US stock market. With rising inflation leading to higher interest rates and concerns about the US economy slowing down, the US stock market is going to be facing a lot of challenges. Therefore, we'll be looking for opportunities to short the US stock market through selling S&P 500 futures contracts. Now, the trading strategy that I'll be utilizing is trend trading, and currently the trend of the S&P 500 is down. So let's open a chart of the S&P 500, and the S&P 500 futures contract, the symbol is ES. And you can see here, the closest month contract is the ES M22, which is the June E-mini S&P futures contract. So let's select this one. And let's open the chart here. And we'll start off with a daily chart so we can see a little bit of a bigger picture. All right, so you can see here that it's basically been trending down. You can see highs here, lower highs, lower lows, lower lows. All right, so let's draw some trend lines right here. So we extend this out right here. Okay, then we'll draw a mini short-term trend right here. Extending down. And we can see this downward trend. So we can draw it basically right here. All right, so there you can see. So you can see it's a downward trend. You can see here, hitting the highs here, lows, bouncing off lows here, hitting the highs here, bouncing off the lows here. And short-term wise, it's probably looking, if it breaks through this lower downward trend line right here, just a shorter term, it should target here. So more ideal price level to short the S&P 500 is around the 4,500 level. So once it hits here, but if you're looking for a short-term trend that it can't exceed above this line right here, then you're going to look to short as closely to this line as possible. So what I'm going to do is I'm going to go through a shorter time frame chart, which is a 60-minute chart. Okay, so what we're going to do here is we're going to draw some trend lines to see where could be some entry points for us to short the S&P 500. So I'm going to draw some more trend lines here, extending it out right here. So you can see there is some support here. And then I'm also going to draw a horizontal line across right here. So you can see that there is some level of support right here. There you go. So looking at this shorter time frame chart, this is a 1 hour chart. The more ideal price level to short the S&P 500 with the futures contracts is, you can see right here, you can probably look to start a position here around 4,100. right here, break through this line here. And you can look to add, or if you want more confirmation, the entry level here would be probably around 40.68 right here. And if it does break through here, then prices probably will head lower. So the first target will probably be around here, 3,800. So if we were to go back to a daily chart so that you can see what I'm talking about, is to break through this level right here. So short term, this upward looking trend line right here, but breaking this level right here around 40.68, and then targeting 30.08 in terms of your exit target price. Before I look for trading opportunities in gold, I want to let you know that this video is sponsored by Iron Bean app. Now, if you're looking for a trading platform to trade futures, you should consider utilizing the Iron Bean app. It's a cloud-based platform that allows you to access trading strategies, over 300 plus built-in indicators, quotes, charts, detailed market information, and more importantly, give you the same user experience whether trading on your desktop or on your phone. Now, most traditional brokers have a separate website, desktop program, and mobile app that gives you varying degrees of information. With the Iron Bean app, all the information you need to trade futures is always at your fingertips. Also, since the app is running from the cloud, you're able to place trades, write formulas, pull up chart data, and execute strategies right at the exchange data centers, resulting in fast trade executions. Please click on the link in the description box below to download the free app now and start trading today. Okay, back to the video. As I mentioned in part 2, gold has an inverse relationship to the US dollar, meaning that I want to look for an opportunity to buy gold when the US dollar is falling and an opportunity to short gold when the US dollar is rising. Now, the trading strategy that I like to use to trade gold is called relative strength trading. So let's open up a chart of gold, and the symbol for the gold futures contract is GC. You can see here, this is GCM22, which is the June COMEX 100 gold futures contract. So this is the closest month. So let's add this one, save here, and let's start off with a daily chart. All right, so what I'm going to do first is I'm going to draw some trend lines to determine what the trend of gold is. So we extend it out here. So you can see here, gold is actually still trending up. Now, if we were to draw some lines here, extending it down, you can see it's sort of symmetrical triangle. So you have lows here, higher lows, and then highs, lower highs. So it's basically stuck in this triangle, but overall the trend is up. Now, let's see the relationship, if the relationship between gold and the US dollar is still intact. So let's add a chart of the US dollar. So the US dollar symbol is DX. This is the DXM22 June US dollar index futures contract. So let's add this one. Okay, I'm going to add a chart here. Okay, let me just delete this. So let's see if the relationship still is intact. So let me try. Okay, so we won't try a 1-day chart, but let's try a 60-minute chart of the US dollar, and let's switch this also to a 60-minute just so that we're comparing apples to apples. All right, so you can see gold has been going down right here up to May 16th. US dollar has been going up, right? You can see the inverse relationship. Now you see gold going up and US dollar going down. So you can feel confident that the inverse relationship between the US dollar and gold is intact. So now what we want to do is, now that we're seeing that the US dollar is going lower, we are looking for opportunities for the gold contract to go up in value. So I'm going to use a daily chart first to see where the levels are. So you can see that it's still in the uptrend here, and there is a level of resistance right here. Okay, it's around the 18, let's see what that is. Let me just expand this out a bit. So it's basically probably around 1870, just in between here, 1850 and 19. Now, so there's a resistance level here. If it can break this, then it has a chance to go higher. More ideal is to wait for the gold price to go back down here, this upward trend line here, or sorry, this lower trend line here, but the upward trend line. So ideally, it would be best to buy this around 1820. Actually, probably better around 1810 for it to go a little bit lower here. If it bounces off here, then it'll be a good entry point to get in. Short-term wise, if you're just looking to play this resistance break above here, you can be looking at around 1872. But ideally right here, and whenever you're looking to buy gold, whenever it goes higher, you want to have a confirmation to see if the US dollar is heading lower. If the US dollar is heading lower, you can feel confident that gold prices can go higher. As I mentioned in part 3, with fundamental catalysts like the Russia-Ukraine war still going on and oil supply still a huge concern, oil prices have continued heading higher. So the strategy that I taught you to trade crude oil is to follow the trend, which is up, and to look for opportunities to buy oil. So first of all, let's pull up a chart of crude oil, and the crude oil symbol is CL, and we're going to trade the closest forward contract for this is CLN22, which is the July crude oil futures contract. So let's select this one, click save here, and then let's pull up a daily chart of crude oil. All right, so we can see here that crude oil prices have basically been trending up, and the trend trading strategy is if it's going up, then we look for an opportunity to buy. So I'm going to draw some trend lines here, starting from here, extend it all the way out here, and you can see that the prices have been basically above this trend line here, steadily going up. So there's a couple of opportunities here in terms of buying crude oil. The most ideal opportunity is to wait for the crude oil price to head down here, okay, towards this upper trend line or up trend line. So right now the current price is about 118.87. So we're probably looking for crude oil prices to come down here along, let's just say probably I would look at 105-ish. Okay, right now it's kind of hard to predict because the prices are still very far away from the trend line here. So that's an opportunity for you to look at, to basically buy crude oil along this trend line here. Now there is other opportunities for you to buy crude oil, and essentially what you can see here is, now if I were to draw a line from here and extend it all the way across here, you can see that the price had actually hit this level, kind of went a little bit above here, and then you can see right here it finally broke above and came back to test right here. So if you don't want to wait for this more ideal opportunity, there is some support level around the $111 mark. So with crude oil, since the trend is up, you're essentially looking for opportunities. You can either look to buy here or look to buy here. Thanks for watching the 4-part video series on how to trade various asset classes utilizing futures contracts. I hope you learned a lot about the futures market. If you're interested in working with me, please reach out to me and we can discuss how I can help you with your futures trading. Also, please make sure you hit the like button and subscribe button and notification bell so you don't miss out on future training video series from me. I'll see you all in the next video.